Which investment has beaten the Nasdaq in the last 20 years and nobody wants to talk about it? That's going to be the topic of today's video. Okay, if you're an expat or a high net wealth individual in particular, check out infuriated.com. Now, today I'm going to talk about a very surprisingly well-performing investment, and hardly anyone actually mentions how well it has done. So basically, the FTSE 250 index, which is smaller UK companies compared to the FTSE 100, has actually beaten the Nasdaq since the year 2000. It's done exceptionally well, even though it hasn't beaten the Nasdaq since, say, the 90s, or indeed it hasn't done as well in the last 10 years as the Nasdaq. If somebody would have bought the Nasdaq and the FTSE 250 on January the 1st, 2000, they would have done better in the FTSE 250. So the Nasdaq's gone from 4,900 to about 15,000 today. It briefly hit, I think, 14,900 or above in the last few weeks. The FTSE 250 has done even better than that. It's done better than 3 times your money. And what's very interesting about that is it shows a number of things. Now, first of all, markets aren't always rational. The FTSE 100 has been stagnant in the last 21 years, although if you reinvested dividends, it hasn't been stagnant. But the FTSE small caps have also done pretty well, but they haven't done as well as the FTSE 250. But the small caps, you would think they would grow more quickly because they're smaller companies that can actually grow more quickly. So the interesting thing is it makes no sense whatsoever that the FTSE 250 logically has easily beaten the FTSE 100 or slightly beaten the small cap index. But it does show, number two, that diversification isn't just some kind of buzzword. If you are a British investor who had 100% of your money in the FTSE 100 in the last 21 years, you would have lost money adjusted for inflation if you didn't reinvest the dividends, or you would have made 3 or 4% per year, about 1 or 2% above inflation if you reinvested the dividends. In comparison, if you would have bought, for example, the FTSE 100 and 250 combined with, say, the S&P 500, you would have done very well. Or indeed, if you would have bought the FTSE all shares or FTSE all caps, which includes the 250, the 100 and the FTSE small shares, you would have done pretty well. And number three, it does also show that the media don't like to talk about these kind of slow and steady success stories. So, the media don't mention this very often, that, the FTSE 250 has done so well. I mean, the narrative is the UK stock market hasn't actually done that well, which actually isn't true. If you look at the UK stock market as a whole, the FTSE 100 has been quite disappointing since 2000. But if you look at it holistically, it's actually done pretty well, especially once you include the dividends, because that's another thing. The Nasdaq doesn't pay dividends, whereas the FTSE, or it doesn't pay very high dividends, whereas the FTSE 250 pays higher dividends. So I'm not saying that's going to be the case in the next 21 years. I'm not saying the FTSE 250 is once again going to beat the Nasdaq, but it does show you that some investments that aren't very sexy can actually do pretty well. How can I help you? In 2 ways. First of all, are you an expat, a high net wealth individual, or just somebody who lives in a part of the world where it's difficult to get access to quality investment solutions? In which case, go onto my website on infuriated.com and find out more. If you don't fit into any of those categories, then in which case there's a range of free material on my website, on this YouTube channel, and indeed on my Quora, where I get over 200 or have received over 231 million views in the last few years. And finally, if you want to actually read my thoughts in more detail, go onto Amazon and find my book on there.